The year was 1992. India's stock market was reeling from a financial earthquake, the Harshad Mehta scandal. The country's faith in the financial system was shaken, but little did anyone know another storm was brewing. A storm named Ketan Parekh. Ketan Parekh, a quiet, reserved chartered accountant by profession. He wasn't flashy like his mentor Harshad Mehta, but he was every bit as ambitious, every bit as dangerous. In the shadows, he absorbed Mehta's lessons, learning not just the art of stock manipulation but the psychology behind market movements. After the 1992 scam, the Bombay Stock Exchange was determined to prevent another Mehta. Regulations tightened, surveillance increased, and investors grew wary. But Ketan, he saw an opportunity. Instead of taking risks on the BSE, he shifted to the lesser regulator Calcutta Stock Exchange. Here, he could operate quietly, unnoticed by most, but not for long. They said he had the Midas touch. Any stock Ketan Parekh bought seemed to skyrocket. But Ketan's strategy was calculated. He picked companies that were small and quiet, ones with low market capitalization and limited public interest. His golden rule, low profile stocks with high future potential. Soon, whispers in the industry began that Ketan could turn ordinary stocks into multi-baggers overnight. He zeroed in on what would be known as the Ketan stocks. Industries related to information, communication, and entertainment, known as ICE stocks, became his playground. It was the late 90s and the internet boom was in full swing. IT and telecom companies were struggling in the West, and Ketan was certain that India would follow suit. He pumped millions into these low liquidity stocks, pushing prices higher and higher. How did he do it? Pump and dump schemes and circular trading. He'd create demand, manipulate prices, then offload shares to make enormous profits. The industry was watching, and banks took notice too. Ketan became so influential that he attracted the backing of major banks, including the Mahadevapura Mercantile Cooperative Bank or MMCB and Global Trust Bank. And not just that, he became a board member of MMCB, gaining more control over his cash flow than anyone could have ever imagined. With access to MMCB's funds, Ketan used pay orders, a move that would allow him to pump in even more money to fuel his schemes. Institutional investors joined in, promoters eagerly hopped on board, and Ketan's influence in the stock market grew to almost mythical proportions. But his confidence blinded him. As he continued pushing Ketan stocks, an even bigger storm was gathering across the Atlantic, the dot-com bubble. In 2001, the US markets began to crumble under the weight of the overhyped and overvalued tech sector. IT and Indian company stocks plummeted, exposing massive overvaluations. The domino effect soon hit India. Suddenly, the Ketan stocks Ketan had built his empire on were in freefall. While Ketan tried to save his holdings, another group saw an opportunity. The Bear Cartel, a group of shrewd traders, understood that Ketan's IC stocks were vulnerable. They started short selling his shares in massive volumes, betting that the prices would drop. The battle was on. Ketan bought heavily to counter the selling pressure, desperately trying to prop up prices, but the Bear Cartel kept shorting. Then came the tipping point. MMCB and Global Trust Bank, which had lent Ketan substantial funds, were themselves on the verge of collapse. As the panic set in, Ketan could no longer sustain his stocks. Prices plummeted. Mass selling wiped out portfolios overnight. The magnitude of the scam was mind-boggling. As investigations unfolded, it was estimated that Ketan's manipulation of the market had involved over 40,000 crore rupees. The once Midas touch turned to dust. Investors, banks, and institutions were left in shambles. Ketan Parekh was eventually banned from trading, but the damage had been done. Ketan Parekh's downfall left scars on India's stock market and changed the way financial crimes were handled. His story remains one of caution, reminding us of the incredible risk that unchecked power and greed can have on ordinary people. Today, his legacy is a lesson, a reminder of how easily fortunes can be manipulated and how entire markets can be brought to their knees by one man's ambition. Ketan Parekh's name may have faded from the news, but his story is a testament to the volatility of the financial world. The market is a battleground, and in the end, it's always the people who pay the price.